All right, so the global Islamic finance industry. We're talking about a multi-trillion-dollar giant here, and it's all built on a very specific foundation of ethical and religious principles. But in an industry that massive, you've got to wonder, how do you keep it all in check? Well, that's exactly what we're going to dive into. And that's a huge question, right? I mean, when you're dealing with trillions of dollars, just hoping that individual banks or companies will regulate themselves, well, that's just not going to cut it. You absolutely need some kind of higher independent authority to, keep everyone honest. And that authority, it's got a name. Say hello to the Central Shari'ah Board. Think of this body as the ultimate referee for an entire country's Islamic finance sector. They're the ones with the final say. So yeah, the formal title is the Central Shari'ah Board, or CSB for short. This isn't just some advisory committee. It's the supreme authority responsible for advising, regulating, and overseeing Sharia compliance for a whole country's industry. It's basically the guardian of the guardians. Okay, so you can't just throw a body like this together, right? It's a pretty delicate process. So let's get into it. Let's take a look at the anatomy of this financial guardian. First off, size matters. You need just the right number of people, and it's a real balancing act. So typically, you're looking at a minimum of 5 members if the board's just overseeing one sector, say banking. But if its job is bigger, if it's covering banking, insurance, and capital markets, well, then that number needs to jump up to at least 7. But it's not just about how many people are on the board, it's about who they are. And this is where it gets really unique. This is not just a room full of suits and finance experts. No, the single most important rule here is that qualified Sharia scholars have to be the majority. They are the absolute core of the board's religious and ethical authority. And listen, not just anyone can walk in and get a seat on this board. There are super strict fit and proper criteria. For the Sharia scholars, we're talking proven expertise in fiqh, that's Islamic jurisprudence, plus formal qualifications and a solid 5 to 10 years of experience. Then you have the expert members. They need to be heavy hitters in their own fields, like law or finance, with professional qualifications and a real demonstrated commitment to Islamic finance. So you see, it's 2 very different skill sets, all pointed towards one common goal. The whole appointment process is really structured. The very first board is put together by making sure that mix is right, that they're independent, and that everyone meets those tough fit and proper criteria. But after that, any new appointments have to take other things into account, like a rotation policy to keep things fresh, and the results from the board's own performance reviews. Okay, so now we know who's on the board, but what does this financial guardian actually, do all day? Let's break down the core functions of the CSB. It really boils down to 3 big things. First, they advise and issue fatwas. Those are binding religious rulings. Second, they have a massive say in financial regulations and setting standards. And third, they provide oversight and, in some limited cases, direct supervision. And that first one, issuing binding fatwas, is absolutely critical. These are not just friendly suggestions, okay? These are rulings on Sharia matters that the entire market has to follow, period. They also get the final say on product structures, making sure any new financial tool is compliant before it even sees the light of day. Now, when it comes to their regulatory role, their power is pretty significant. The CSB works hand in hand with the government, advising on laws related to Islamic finance. They also team up with the central bank to approve Sharia directives. Basically, they're embedding compliance right into the country's financial DNA. So it kind of sounds like they're mostly reactive, right? Like they wait for requests from regulators or banks. But can the board ever just step in on its own, proactively? Yes, they can. But, and this is a big but, only under very specific and very serious circumstances. There are basically 3 triggers for them to go in on their own. 1, there has to be a major Sharia violation. 2, the market has to think that the CSB knows what's going on. And 3, real people, stakeholders, are going to get hurt if the board doesn't intervene. So yeah, it's a really high bar, which makes sure they don't just throw that power around. All of this authority, all this power, it all hinges on one single thing: trust. If people don't trust the board, the whole system falls apart. So let's dig into the rules that are designed to guarantee their integrity and, crucially, their independence. And the standard itself actually gives us the perfect definition. Independence is an unbiased attitude free of influence and conflicts of interest. And that's not just some corporate jargon, right? It's not a nice to have. It is the absolute foundation of their credibility. And to make sure this happens, the rules are crystal clear about who is not allowed on the board. We're talking about staff from the regulatory authority, anyone who works for a financial institution that the board supervises, and any major shareholders of those institutions. The lines are drawn in the sand very clearly to prevent any conflicts of interest.
And it doesn't stop there. There are also key internal rules to keep things independent and effective. For instance, members have term limits, usually 3 to 5 years, to stop things from getting stagnant. There was also a rotation policy to make sure fresh perspectives are always coming in, without losing all the old experience. And get this, they have to do a mandatory self-evaluation every single year, forcing them to look in the mirror and review their own performance.
And finally, let's talk transparency. Their work can't just happen in some secret closed-door meeting. Nope. The CSB is required to compile and regularly publish its fatwas, its rulings, and this part is so important, the reasoning behind them. This way, everyone can see and understand how and why these huge decisions are being made.
Okay, I know that was a lot of rules and structures, but here's the big question. Why does any of this governance actually matter? Let's zoom out and connect the dots to see why this is the very foundation of a trusted system.
Look, this incredibly detailed structure isn't just bureaucracy for the sake of having rules. It is the absolute bedrock of trust. It's the thing that gives everyday consumers, big-time investors, and even international regulators the confidence they need to believe that the whole system is running with integrity and staying true to its core principles. So, when you boil it all down, the integrity of the entire system really rests on these 3 pillars, and they all have to work together. You need clear rules that everyone can understand. You need the expert judgment of both scholars and finance pros. And you need strict independence to guarantee every decision is unbiased. And that leaves us with one last, really crucial question to think about. This system is, without a doubt, a powerful model for governance. But as global finance gets more and more complex, more interconnected every single day, how do these guardians have to evolve to meet the challenges of tomorrow?